this video, we are going to see about securities, and then we'll see mostly the following four things. What is securities, function of the security market, regulators of the security market, and participants in the security market, all according to Indian context. So, what is security? First question. Okay, so securities, as per the Securities Contracts Regulation Act, which was drafted in the year 1956, it says it includes all the instruments such as shares, bonds, scripts. Okay, so scripts I'll explain, and then stocks, under the marketable securities of similar nature. Okay, these are all actually the securities according to the SCR, Securities Contracts Regulation Acts. So scripts are like some debt document, a kind of coupon wherein a person will say that I owe you this much money and I am liable to pay that much money with this much interest. So and you will sign and give. It's kind of okay, a coupon in a canteen. Let's say like you are not have the canteen, okay, cashier is not having money, then instead of money he gives you coupon. That coupon you can one day is a kind of okay um, debt, okay, which he is okay liable to pay to you. Those are actually scripts. Scripts were used in Indian context as chits, and also it is most used in the truck system, wherein okay in the remote parts of the country where the people where the amount of during those days, okay, where the amount of money was not that much, then they used to give this okay scripts or some sheets which actually says that this person is indebted to some party for this much amount of money. So it is however okay in cash. Those are actually scripts. So now let's go into the second part. What is the function of the security market? So security market is a place where the buyers as well as the sellers enter into transactions. So buyers and the sellers okay meet in this security market. Actually, what they will do, they need to purchase and sell shares, bonds, debentures, etc. It performs an important role, okay, of enabling corporates, entrepreneurs, even governments to raise money. So security market, okay, is a place where these persons can raise money. So also this is a place where the transfer of resources from those who are having idle resources, who are normally called investors, to those who are in need of money, mostly corporates, is efficiently achieved. So this is where the efficient transfer of money happens. The word efficient here means okay, money is put into efficient use rather than okay being used idly. So now, what are all the securities that is usually being traded here? We already know, right? Bonds and also this government securities, and we also know like the derivative products, the derivatives like forwards, futures, options, warrants, and then mutual funds. All these things are being sold in this securities market. Now let's see the third component of our video, which is going to be the regulators. So who are actually the regulators? So does the security market need any regulators? And if so, in India, who regulates the security market? All these questions will be answered in this segment. So the absence of conditions of perfect competition in the security market, okay? So that actually makes the need of the regulators in the security market, perfect competition. The regulator ensures that the market behaves in a desired manner so that the securities market continues to be a major source of finance for corporate and government and also for the interest of the investors. So that's the need use of okay regulators and need of regulators in the market. So to ensure the perfect competition and also the interest of the all the stakeholders are protected, the regulators are needed. So who regulates the security market in India? In India, Actually, the responsibilities for regulating the security market is not only by SCBA as many will think. Okay, it is being jointly shared by three people. One is the, no, even four people I would say. One is the Department of Economic Affairs, DEA. Another one is the Department of Company Affairs, DCA. And the other one is RBI, Reserve Bank of India. These four people, okay, together regulates the security market in India. So who is okay, but as far as our video is concerned, we will discuss in detail about this SCBI. So who is this SCBI? All these things. So SCBI is a regulatory authority in India under the Section 3 of SCBI Act, okay, which was actually drafted in the year 1992, enforced in the year 1992. And then, so it actually provides for the establishment of the Securities and Exchange Board of India with the statutory powers. It actually protects the interest of the investors, as I told in the need for the regulators already. It actually protects the investors, and also it promotes the development of the security market. Okay, it protects, it promotes, and also it um, it's this thing. It regulates the security markets. So these are the three things. It protects, promotes, and regulates the security markets. These are the major functions of SCBI. Further, if you could say, its regulatory jurisdiction extends over um, the corporates in the issuance of capital and the transfer of securities, in addition to all the intermediaries and the persons involved with the securities market. So usually it has powers for regulating the business and stock exchanges and any other security markets, and also the registration and regulating the work of stock brokers. So it actually regulates even the stock brokers. Okay, and then it also calls for the information from the undertaking inspection. Okay, so if suppose it feels like a particular okay disclosing company who is actually participating in the issuance of stocks or issuing of stocks is not having okay the necessary information disclosed, then it calls for certain information. It has that power, and also it can undertake okay inspection of the company participating in the issuance of stock, or then also it can conduct inquiries and audits. All those things it can do, and it can also okay uh, regulate the intermediaries who are like mutual funds and other persons okay associated in the security market. So, so this is all I can say about the regulators. Now let's move on to the fourth segment of our video, which is the participants. So who are the participants in the security market? The security market essentially has three categories of participants. Namely, I would say the issuers of the security, the investors of the security, and the intermediaries in case of mutual funds like okay banks, all those things. So these are the three major okay um, participants in the security market. But one would say like, is this okay intermediary needed? Because the issuer and the investor can meet and they can do it, right? And why do this intermediary is needed? Is it necessary to transact through an intermediary? Yes, it is advisable to conduct an transaction through an intermediary. Let's say like you need to transact through a trading member of stock exchange. For let's say okay you want to buy or sell a security on a stock exchange, then what you need to know is you need to maintain an account with a depository. As I already told, depository is like a bank wherein you will store your electronic formats of equity and the debts there with a special unique entity called depository participant. So let's say like yeah, you need to maintain let's say an account with the depository. You need to hold securities in the demat form. Then you need to deposit money with a banker to an issue if you are subscribing. You get guidance if you're transacting through an intermediary. Okay, that's a very important thing. You get the guidance if you're transacting through an intermediary. And also, it's better that you should choose an intermediary who is actually registered with SCBI. So whenever you find any intermediaries like let's say like ICICI Direct or Share Khan or Motilal Oswal, these things, it's better that you should check, or any of the new parties, it's better that you should check that whether they have any valid registration ID with ACBI. So because the reason is, if we do transaction through intermediary who is actually registered with ACBI, then whatever action he is taking is accountable. That's one major reason why we can go through intermediaries, because it becomes legal, because it becomes legally responsible for whatever activities he is accountable for. So, is there any segments in the security market? Yeah, there are actually segments. There are two types of segments, I would say. One is the primary market segment, another is the secondary market segment. So these two are interdependent segments. So the primary market, usually the new issue of shares will be made, whereas the secondary market, it usually deals with the securities that are already traded in the primary market. So that is actually the different types of segments in the security market. So that's it as far as this video is concerned, and thank you.